Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here by myself because Joel and Dennis decide they don't want to start the show on time. But I know you got to give the people what they want, and what they want is the show starting at 8 o'clock on the dot. So here we are. Joel and Dennis will be on with us in a minute here whenever they decide to come back to their desks. From what we do is we do like our pre-show huddle. Then they both go and do things, and then they come back at the last possible second. So here we are, starting without them. I just want to say, but before we go, if you guys missed it last night, there's Dennis, and I'm sure Joel will be here in a second. Dennis, good morning. I just want to say, if you missed it last night, we did a 3-hour, actually almost 3.5 hour Benzinga Pro demo. It went till like 11 o'clock last night. I'm going to put the link in the chat. Nick Shaheen was there. It was fantastic. It was Jonathan Mallard, Nick Shaheen, Neil Hamilton, and it was amazing. So there's the link to that demo in chat just now. 3.5 hour demo of Benzinga Pro. If you missed it last night, it was a lot of fun. Okay, what's on the radar today? We are talking, got a couple of earnings, Constellation Brands, Bed Bath & Beyond, General Mills. We have a big double downgrade from Virgin Galactic. There's Joel. Good morning. We have MDB, MongoDB did an offering, but we want to talk about end of the quarter. Yes, we have arrived at the end of the second quarter of the year, and we're going to talk about how that could impact trading today. So that's going to be the theme of the day. End of the quarter window dressing. Will they, won't they? We'll find out. Two guests today. Anne-Marie Baiynd. She is great. We love her.
Yeah.
She was on the show at 8:35. And at 9, we've got Chuck Self, the CIO of iSectors, joining our show for the very last time because he is retiring. He's riding off into the sunset.
Retiring.
We had to get him.
I'd love to retire.
Yeah, we had to get him on one last time before he retires, and so he's going to give us his parting thoughts, and then he'll be gone forever. But in the meantime, we must get to the overnight markets. Joel, how are we doing this morning?
We're doing okay, Spencer. We're down 2 points in the S&P 500. We have my favorite technical S&P setup of all time.
Ooh.
We will go over that at 9 a.m. on PreMarket Prep Plus. It's a great setup, Dennis. You probably know what it is. And you have crude trading up 79 cents at 73.77. Gold can't get back over 1765, folks. I'm worried. Gold down $4 at 59.60. Silver going the other way, up 7 cents at 25.97. Silver holding there a little bit better. Bitcoin, it's a yo-yo. Thought it was clearing 35.5. Nope, we're back under 35K, down $1,555. And before Spencer asked me to share my charts, I'm going to share my charts with you. And we have Ethereum. That's trading in the red as well. That is down $65 at 21.6875. Triple D, you must not have done your work last night because we got a little red on the screen. What's going on?
Europe, I would say.
Yeah.
And the Delta variant.
There you go.
Seeing this talked about in the media quite a bit. It still has the reopening trade very spooked, which we've been talking about for the last few days. The sell-off did continue yesterday in the airlines. Boeing, which was trading up in the pre-market, quickly gives it back. You have separation happening here, and the market continues to move into what has continued to work, it seems like, forever, and that is tech. Tech still catching bids. Tech actually green here this morning. It was green just a few minutes ago. It's a slightly red, the Qs here, but this is what goes on. The market continues to come into tech.
We saw it last year. Tech wins no matter what, right?
That seems to be the case. The only way it doesn't win is it's a very crowded trade. So, that is the one thing to obviously consider. It is very crowded in tech, but it's been working and it continues to work. And people see that, hey, if we have a little bit of uncertainty here with the Delta variant, looking, the reopening trade isn't working so well, I'm going to go to what works. And that is tech, and that continues to be tech. It's all kinds of tech. It's growth tech. It's mega tech. It's all whatever tech. It's cathie tech. Tech is just continuing to work. I don't know when that trade eventually turns. It is crowded. Maybe we get another turn here again. But right now the market's just like a little uncertain about the whole COVID situation. So they're flying into tech.
Yeah, don't think or don't guess. Just rely on the technicals, right? For some stocks, it's easier than others. Was really hoping Amazon was going to get to 35.50, right? Prime Day run up. It didn't. It stalled at 3,500, right? It hasn't given up the boat yet. But in all these 11 months of consolidation that we've had, we've never ripped. I mean, we weren't exactly at the lower of the range, but when we went to 3,200 and we went on that run, but it's just a clear bogey here. What you need. Apple's a little bit tougher because I like Apple here, frankly. That's not at an all-time high, so that's just kind of climbing up. It had the technical setup and breakout. Microsoft, I mean, how could, what's there to worry about in Microsoft, right? You're making a new all-time, every day. Maybe keep an eye on the former all-time highs to stop out, or just keep an eye on the all-time closing high. And what I missed, the Googster. I mean, that just consolidates and moves higher. Facebook got a little giddy on on that news. I kind of thought was old news. But Facebook, the way that thing trades, man, you can see when the institutions are lining up, and to call the institutions lining up to sell this with two highs in the same area, I think would be a little bit premature.
I think so too. I mean, it was a big move. It's going to digest that move. We'll see where it goes from there, but it's hard to get bearish tech here. The question is, Joel, take it back to the reopening trade.
Sure.
Are we starting to get oversold on some of these stocks? I mean,
man.
It's been an ugly month for all the reopening. Like, I have Las Vegas Sands. It's one of the stocks that I have. It's a pure reopening stock. I have the barbell approach. I'm heavily tech. I've always been heavily tech, but I still have some other stocks that I want in my portfolio. Las Vegas Sands was like, oh, that's a nice reopening play. I picked it up around $55 or $56. It ran up to over the 60s, so I was up nicely. Now I'm down in it, and I'm down pretty good in it. The trend has been awful, but this is your classic reopening stock. And if you look, they all look the same. I mean, Carnival Cruise Lines, if we just want to go to that one, $31. About 3 weeks ago, it's now $25. Norwegian Cruise Lines, $34. Now it's $28. Boeing, we know, has come off significantly off the highs. Are we getting to a point where maybe it's time to add to some of these stocks? I'm just, I haven't done that yet. I haven't been adding to the reopening trade, but are we getting to that point where you want to start looking at that?
Adding to losers, absolutely not.
Well, that's a good point too.
Dennis, I'll say I'm a little disappointed in you in this Las Vegas Sands, and for two reasons.
Sure.
What's the trend in this since 2014?
Probably down.
Yeah, the
Not
chart's
really
up there.
I would argue almost no trend though.
Okay,
They got 90 to 30 to 80 to 30 to 50. It's kind of in the middle of nowhere.
Okay, so what do you always do?
You know what suckered me into Las Vegas Sands is the whole media. Casino, Las Vegas has never been busier. How often did we hear that a month ago? Spencer, you can vouch for me on this one. Las Vegas has never been busier.
I don't know if I've heard never been busier. Maybe since
the hotels are packed. Everybody's flocking to Vegas.
Since the start of COVID, maybe, yeah, but not. Yeah. I don't know if I can say never in history. But isn't Las Vegas Sands not in Las Vegas anymore?
I don't know. It's got the name.
No, I know.
Is that true?
Yeah, they're out.
I'm not.
Are they completely out?
I'm not making that up.
They're out. You're right, Spencer.
More research, more due diligence here.
Yeah. Another thing.
But the Adelson got them out of there. Well, anyway, I was just going. Usually when you're swing trades and you're the other trades,
it's not a swing trade though.
It's a long-term investment trade.
In the long term. Yeah, because
okay.
I didn't have any exposure, and the one thing is what you'll learn as a portfolio manager, and I don't know if I'm a portfolio manager or not, but I'm managing a fairly large portfolio, and that's my own wealth. Is you want, your asset allocation is going to dictate your performance a lot more than any one stock. And I just looking and I was like, I'm like probably 50 or 60% tech, not joking, in my long-term portfolio. It is heavy tech. Why? Because the tech stocks in my long-term portfolio have just grown to be monsters. So you look at that and you think, well, how can I, do I want to put more money into tech? Trading wise, my trading account sometimes will be loaded right up with tech. I would never have Las Vegas Sands right now on as a swing trade. It wouldn't exist. It wouldn't be in my swing trading account because I stop out on those. But when I put something in that retirement account, it's like, I want a little bit of exposure there. I want a little bit of this reopening going on that I didn't have a lot of it. So, again, it's about diversification. I'm not justifying holding losers. Maybe you should cut all your losers immediately. Maybe you should do that in the long-term account as well. But I just know, like I can remember my Merck, buying Merck back when it was $35. That went to $25 on me, Joel. $25 my Merck went to. Where did it end up going? Well, 77 here now. So I've still got a lot of that Merck. So you got to kind of know what you're coming into. I mean, if you're coming into this as a swing trade and you're letting it become a long-term investment, I don't think that's, the style.
Okay.
But if you've got this designated going in and you want to add some balance to a tech-heavy portfolio, I mean, it's a different story. Should you cut all the losers in your long-term portfolio? Maybe you should. But again, like I said, if you believe in the company, long-term fundamentals, sometimes, things get oversold. I'm not on margin in my long-term account. I'm not going to get blown out in my long-term account because I'm not on margin. So, I mean, it's a different story. So I'm not justifying it. It was a bad pick. For sure. It was a good pick probably at the time. I just didn't get out in time.
What about long term, you're staying in it for long term, but how's their online operations? Because if anything, I just see, gambling, like, why do you need to go to Vegas? Like, why do you need to go to a casino?
For the bells and the whistles.
For the bells and the whistles and the free drinks that are watered
Vegas
down?
Is going away. I don't think we're just going to this environment where people are going to gamble from home and get the same excitement as going to a casino. No. I think people like to go out for dinner. I think people like to go out. I don't see the casinos going away. Maybe it's the wrong stock. Maybe I want some exposure there. So I think the argument would be maybe I should trade it in for a win, or maybe I should trade it in for an MGM. Maybe I should trade the stock in for different exposure in the reopening. And I could hear those arguments. But just to go and say Vegas is going, people aren't going to go to casinos anymore, I don't think is.
I don't think that's the case either. I just think there's more I mean, for me, how do you roll the dice, online? Do they have something like that? Because, I mean, that to me, the fun of a crap game, everyone, being around, all the chips on the table, everyone cheering and screaming. Not sure when I'm going to do that again, but I don't know. There's
Most
just a lot
people have
of
been dying to do that, though.
yeah.
I just know that's that gambler mentality. Some people
Doesn't go
love
away.
Vegas. Some people love Vegas. I don't think that goes away, but again, maybe this isn't a Vegas play anymore. So, Las Vegas Sands not a Vegas play. Something to think about as well. So
lost wages.
I'm down about 8% net. If all my bad long-term investments could only go down 8%, I'd be doing pretty damn good. I'll tell you that much.
What do you do for yield, Dennis? What are you doing for yield right now?
I've always that's a great question. I guess because
I really would like to know. I'm taking notes here.
I've always had a lot of preferred stocks in my long-term portfolio. Again, I'm Canadian. I know they're boring as hell, and people don't like to hear about yield. I was looking at one yesterday, though. I don't have it in the long-term portfolio. But what about like an Energizer convertible preferred stock? I mean, people don't like talking about this stuff, but 8.1% dividend on an Energizer preferred. I mean, it's 8%. I always think if you're going to go after yield, why not go to the preferreds, because they hold up better if we ever get into crisis mode. And, as opposed to going to a bank for 3-4%, there's a hell of a lot of preferred stocks out there that give you 6-7% plus. DDT, I've talked about that one for years. I don't know when they're going to call this in, because it's a 7.5% coupon. Obviously, the company can't be doing as well as everybody thinks it's doing. But here's here's the comment at all-time highs. The preferred is yielding, and this is a capital trust security, so it's almost like a bond, 7.14% at 26.25. I had this in my portfolio for the better part of a decade. I finally sold it out. I actually sold it out I don't know if it was right before COVID, but I sold it out a while ago. And it is callable. So what that means is they can call it in at $25 anytime they want. But it's been callable for like 12 years.
I know. You've talked about that. What's the Energizer symbol?
You get 7% on your money just continuously.
What's the Energizer symbol?
ENR.PRA.
Oh, my goodness.
ENR.
.PRA, or you can go ENR-A. Symbology when you get to the preferreds depends on your platform.
What about, I'm just looking at the stock. Oh, I'm buying it today. I'm buying that preferred today, full disclosure.
You're going to buy that ENR.PRA?
Yeah, because some of the stuff, I'm looking at some structured notes.
And it's a convertible option to it. I haven't done all my research on that one yet. I just started looking at it. So you got to look where the convertible option is, because it's convertible. But if that yields, we're all 8.13%. That looks pretty good.
Because Jerry has told me that rates aren't going up, so I don't have to worry about that, right? Because rates aren't going anywhere for a couple years. So if there's some of these 1 and 2 year notes that I was looking at, they're like 5.5%, 6%, 6.5%. I mean, I know that's pittance to what you can make in meme stocks, but at this point, with where the market's at, I'm all over that. I am all over stuff like that for a while. I don't need any more spies or pulling my hair out over Peloton, even though that was Lisa's call, or Exact Sciences. I haven't even looked at that thing in a while. Oh, I want to sell that again too. L Brands. I mean, when do people going to stop needing new underwear and bras? You never know. I don't know. I think good. I'm glad.
I know there's a lot of opportunity in preferred stocks, and I think if it depends on your age group. Joel and I aren't, Joel especially is a little bit older. I'm, getting up there in the upper 40s, approaching. So you start thinking about but I think I'm more on my wealth. I like the wealth. I like protecting my wealth for two reasons. One, I went through the tech bubble burst, and two, I went through the financial crisis. So I know if you start in the last 10 years, you think, oh, why the heck do I need to worry about it? But every 10 to 12 years, we seem to get some type of crisis. We had the COVID crisis, just didn't last a long time, where your portfolio temporarily gets destroyed. Those preferred stocks usually hold up better. They didn't during the COVID crisis because everybody was pricing in the end of the world. But if you were going out there and buying preferred stocks in that COVID crisis, you were doing it absolutely correct.
Yeah, discount.
Yeah, you were. There's lots of preferred stocks to the Canadian investors. I like the L brand, or the Loblaws, which is the same symbol, LB in Canada. That's a grocery store. I was picking it up when it had a 5.5% dividend. I think it's down to like 4.7 now. So it's not as good, but I mean, it's your biggest grocery store in Canada, it owns everything. So is it going out of business anytime soon? I don't think so. So I think it's better alternative to, if you've got a lot of cash and you don't want to have a lot of cash, but you don't want to take a lot of risk. I do look to preferred stocks. I think, they're underused by this environment because this environment is spoiled to a certain extent because the market's been giving so much returns that, why in the hell am I going to go after a 7 or 8% return when I'm getting 7 or 8% a week in my meme stock? So
I was looking seriously on that thing that Raz mentioned, like the USD. And I talked about Bitcoin, with the chief investment officer when it was like 55K, and she was like, I don't understand it, but if you put a portion of a portfolio in there, and then look, I don't want to hear about it, and let's look at it in 10 years. And then I'm like, crap, I don't know. And then I said, no, I don't know. I just don't trust Bitcoin. So then it falls to 30K. And I'm like, oh, okay. Maybe we should take a look at Now's the time to look at Bitcoin. Maybe now's the time to look at the USD. She goes, no, I don't think so. I don't understand it. So I don't know. That USD has a nice yield. It's just the funds that I would put in there. I just got to have that money insured.
That's it. You're banking
can't
on that company. You're lending that company money. It's kind of like a preferred stock. Like you think, oh, I'm just going to a cash account. I can pull it out at any time. We can do that in a preferred stock too. You're basically lending the company money. Yeah. So there's lots of 6-7% places if you're willing to lend, the company's money here.
Yeah, exactly.
Yeah, there's lots of places. I mean, I look at Dillard's and I still look at the DDT and you think DDS $177 stock. It doesn't look like it's going out of business anytime soon. At least the stock price is way wrong if that's the case. So it looks like my 25. Now, again, this could get called on you at 25, so you would have a $1.25 risk if it gets called on you. But that hasn't happened for the last 12 years. So I don't know if it's going to happen anytime. We started talking about this on the show when we started doing it 7 years ago.
I know.
And I was like, I got this one in the long-term portfolio. I've had it in there forever. They just keep paying me 7%. I don't know when they're going to call it, but eventually they're going to. Apparently, they're not going to call it. If I keep talking about it, maybe the company's going to listen and call it. But I don't know why they're paying 7.25. You'd think they could borrow it cheaper elsewhere, but.
Okay. All right. 42, our all-time closing high is exactly where we're trading this morning. Spencer's probably sleeping with all this long-term.
The young guys don't want to hear. They don't want to hear about preferred stocks.
No.
Yeah. They don't want to hear about 6-7%. Dennis.
No, they say, "What are you talking? This is boring.
Ridiculous.
Call me when I make 6 or 7% on today. I want to make 6 or 7% today
off the open.
All right, let's talk.
Give me a trade.
So we have the ADP numbers higher than expected. Whatever. Let's talk about the end of the quarter. Okay. Today is the last trading day, the last day actually of the first half of the year. We talk about how that could. There could potentially be some window dressing and all that. Maybe you can guys both explain what exactly that means and how the end of the quarter can sort of mess with things, create volatility, if you will.
You want to go first?
Yeah. So basically, in the definition of window dressing is that portfolio managers want to have the good companies in their portfolio and they don't want to have the bad companies in their portfolio, the companies that have performed well in the last quarter. So what you typically see, textbook is that the companies that have done well in the quarter typically get bought today. And the companies that are doing poor in the quarter typically get sold today. And sometimes these can be turning points when you roll over the calendar to July 1st, and obviously when we would do that tomorrow. So, does that really happen in practice? I don't know if every portfolio manager is saying, oh, I've got to own Microsoft right now because Microsoft, I want to show all my clients. This was when you had quarterly reports were really big too. I mean, a lot of times now you can get your holdings almost daily. They're showing them. When you think about an ARC, they show it daily. So I don't know how much this still happens, but historically, monthly, quarterly reports were going out to all the investors in the quarter. And then I would see what kind of stocks did they own? Oh yeah, they own Microsoft. That's good. So they would turn around and buy. If they didn't own Microsoft, they'd buy it today because they want to own it because it's making new all-time highs. That's kind of what it is. So the strong gets stronger, the weak get weaker typically on this day. Whether that really holds in practice anymore, I'm not sure of.
Yeah, and they want to get paid too, end of the quarter. They also want to talk to their clients last week and say, hell yeah, we picked up some of those growth tech stocks on the return. Yeah. And I mean, a lot of things. So I don't know how much, that actually goes on now. A lot of people are managing. Theory, that's the theory behind it. Probably, like gold. Oh no, man. We sold our gold last month. We're not in gold anymore.
Yeah,
Well,
so they
meanwhile,
sell gold today so you don't have to see it. Yeah.
Exactly. So, I don't know what pronounced effects. I mean, what you have here, a little different situation. You have the end of the quarter, and then Friday you have the jobs number, and then Monday off. So, there's other dynamics at work, but that's pretty much end of the quarter window dressing. The strong get stronger, and the weak get weaker.
Okay.
That didn't cover that didn't take very long. Let's go on to individual stocks.
Stocks.
I want to start with space.
Okay.
You got to give a shout out to
I'm
Travis.
so. Oh, go ahead.
I'm going to give a shout out to one of my Twitter followers, Travis. He thanked us for the trade. I don't remember us being really bullish that long, but maybe he was thanking us for the exit here because we were talking about the old highs. I think I sold this way too soon. I participated in this, but not nearly enough. So ugly day for it yesterday. Significant sell-off. Now you get Bank of America saying, okay, we're out. They go from buy to sell today. Why wouldn't you tell us this yesterday, Bank America? But anyways, they go from buy to sell today. Price target $41. The sell-off in space continues. The gap would actually take you down to about that $41 area here, Joel. So does this thing fill the gap today? It's $3 more. I don't know if it does that, but this thing is in a free fall here right now. I do think you'll find support in that 40 to 41 area. So if you're looking for a bounce level, I think it could happen in that 40 to 41 area. And shout out to Travis, who made a great trade on that.
Okay, well, this is why Travis. I don't know if you got him in and I got him out.
He definitely wasn't following me on the out because I'm long gone on that.
Okay. This is why you need to follow me on Twitter and join PreMarket Prep YouTube. Okay. June 28th, I tweeted, if you have not taken profits in space yet, you may have a reason to. Potential double top.
Ooh, good.
Right? June 28th.
So
look at the chart. Yes. Look at this. Right here. Potential. I hedged there. You got to hedge. But you had the big run up. You had a double top. Don't tell me it's not an exact double top. Dennis, you like the red bar, right? The red bar after it. It was just stupid. And I was looking at the 50s when the thing was at 55, and I'm like, oh, they're going to pin 50 during the week. And then I looked at the 48s and 40s. I never pulled the trigger on it, but I put that out. So there you go. I'm glad you had a good trade. I think Dennis probably got that could be a new trading system. Dennis gets people in, and then I get them out. That could be
because I always sell way too soon.
And I'm too scared to buy, and then I wait to short, and then I get run over. So let's just
maybe that is the system.
That could be a new trading system.
I'll tell you Joel's double top theory, double bottom theory, and some technicians might look at what are you talking about because they look at a different time frame. When we say double top, we look for 2 consecutive highs on the daily, 2 consecutive lows on the daily. Joel's taught me this. It does work well because when you see a stock just ripping higher like Space did on the 25th, and all of a sudden on the 28th, it stalls out right around the previous day's high within 20 cents of it, and you're talking a stock that moved 10, 12 bucks a day before. So 10, 20 cents is a double top. You want to pick, it's very close. It stalls out right at the previous day's high. That can be a sign to say, okay, let's ring the register and get out of some of this. And if you were doing that yesterday around noon, because you can see it had the run up to try yesterday's high, or actually, I guess it was not the open. It was closer to the open that it was doing that. I guess that was the day before. That was 2 days ago. Yeah, we're going back 2 days ago. So yeah, it did right around noon 2 days ago. Man, that was the perfect out. And now you're looking at it down 13 points from that point in time. So lots of lessons here. 1, look out for those daily highs if they can't take them out. 2, I don't like chasing stocks when they're gapping up 13 points because you know what? When it turns fast. That felt like upside capitulation. That was upside capitulation. That was the point on the 25th where everybody said, I have to get in space. It's going to 100. Not straight there, though. Nothing, even though it's in rocket ship mode, rocket ships don't go straight to 100. Here's the wicked shakeout. Here's the wicked pullback. The person that bought at 57 is like, gulp. So 44, I do think you'll bounce at 40 to 41 because that's where he broke out from before. But again, that system works well, Joel, that you've taught us over the years, that double top, double bottom system.
Yeah, and another thing too, just I know people don't want lessons, but it's also like market structure and market dynamics. People are like, Dennis, you remember the day when it was like 49.50 in the pre-market and you're like, I'd be ringing the register. You know, you had no idea that it was going to 57.
Oh yeah, it kept going.
Right. But people sell into strength. How much easier is it to sell on this day and put a little piece out at 51? Oh, I got lifted. Oh, you put a little bigger piece out at 52. Oh, I got lifted. You put a bigger piece out at 54. Oh, wow, I got lifted there too. 55, you put out, the whole enchilada, and you can bring your average price right up, right? The next day, you still had some chance to sell, on some strength when it rallied. But now, this day, you're selling you're having to hit bids, and you're hoping for pops. This day, you're hitting bids, looking for pops. Today, with the lower open, now you're saying, oh, man, I hope it sees the end of, the lower end of yesterday's range, which it very well could. And I just want to give another example. What about Amazon, the prime buyers, okay? Run it into Prime Day.
Yeah.
They were selling on this day, and they were selling on this Thursday, and they were selling on this Friday. And then this was the Monday, Tuesday, and Prime Day. They still got, the CNBC was, I guess the results weren't as good as they expected. You were still able to sell in the strength, but there's a point where the market turns and there's not the preponderance of buyers. And instead of selling in the strength, you got to sell in the weakness. And then you have the shorts getting in there, sniffing out the big orders, et cetera, et cetera. But that's just a little bit of, larger positions. I don't know if we have any institutional traders listening or, traders that trade, large positions in multiple stocks. I mean, it works once, it works 1,000 times.
Just stocks that go into rocket ship mode. I ring the register when I call it upside capitulation. When you see a stock going up, and all of a sudden you get a day where it just blast off mode. That's usually going to be the turning point day at some point in time. Was it at 49? No, and I was way early, obviously, but just by 3 hours. But then 57 ends up being the top. But you got that double top that Joel talked about there. So
I didn't know.
This is exit strategies is really what we're talking about here.
That's
and I need to re-listen to this show because, like I said, I always exit too soon.
Were there any daily highs in there? I didn't do it off that. I sometimes if you go back to, you like to see if there was any.
Yeah, you know what? You're close enough where there was those three tops. Call it the three tops. You go at the weekly chart. You had the 59.43, the 1 week 62.80, 60. You knew when you got back up to 60. There's going to be major resistance overhead. So if you're buying at 57, you're looking at, maybe there's another 3 points here before it runs into major resistance, but there's a hell of a lot more downside. Always analyze from risk return, and you're getting, if you're long the thing, you're going for the last 3 points. It's like Nick Shaheen says, when he's writing options, he doesn't sit there and just let them expire worthless. He closes them out when they get down to 10, 15 cents, puts on for $1. He doesn't wait for the last 10% of the trade, to make the absolute most, because you see sometimes those options go back from 10 cents, they go back to $1 and ends up losing on them. So, I mean, that's the consideration, is you're trying to get that last $1 or $2 out of the trade after it just run $20. Sometimes it's just better to just take your bird in the hand as opposed to going for all of them in the bush.
That was a great discussion. And also, can I just note one thing in the B of A note? One of the reasons for the downgrade, which seems incredibly obvious to point out, but I haven't heard it actually mentioned. This is a direct quote. Furthermore, the development of space technology carries significant risk, and the market tends to respond more volatilely to development-related news. Yeah, God forbid something terrible happens. What do you think is going to happen to the stock?
They must have listened to the show, the afternoon show yesterday.
Oh, I think they listen. Bank of America they listen to Benzinga.
Yeah, who's Bank of America in here? Is that Nature Bound or Easy Mike? Who are they?
In the chat. Who's hiding under?
The analyst's name is Ronald Epstein, in case you're wondering.
Hey, Ronnie, how you doing? Welcome to the show.
He goes under Ronnie in the chat.
Ronnie the limo driver. All right, 8:32 here.
Is that from a movie? Is that from a movie?
No, that's from Howard Stern.
Howard Stern. Okay,
Yeah.
close. I knew it was from something.
Yeah,
Let's go to Bed Bath & Beyond numbers.
sure. We can go to Triple BY, and then we'll get Anne Marie on in a second here. But Bed Bath & Beyond earnings this morning, EPS, they missed their estimate by a smidge, a 5-cent EPS quarter versus an 8-cent estimate. Sales of $1.95 versus $1.87 billion. So the quarter was okay, but they did raise their guidance. The consumer is strong. Did you know that? Q2 EPS guidance raised above, or actually in line with the estimate. Fiscal year sales guidance was raised as well.
So slight.
Yeah. Slight guidance raise, but a raise is a raise is a raise. How's the stock doing this morning? I didn't actually look at the chart.
It was up, and it has given it all back here. I don't know what to say about this stock. It was a meme stock. We know it had the explosion in price, and then it even had another explosion a few days later. I have no position in this. This is a tough one here.
Joel, no, this is an easy one for you.
Okay, Joel, take it away.
Go to the chart. Go to the chart, Spencer.
Give it to me.
You got the chart up?
It's on the screen. Yeah.
Okay. My hands are over on the left, right? So you can't see. You can't see this chart on the left, right?
What do you mean? What are you talking about?
There's 4 charts, Joel.
There's 4 charts. My hand's over one of them.
Joel, your hand covering your screen does not mean that we can't see what's on your screen.
Oh, shoot. Why not?
Joel, take your pills.
Okay. Now.
Joel, go take your pills.
That was a bad one. Okay.
Joel, go
Out of
take your
pop
pills.
here. Out of pop. Out of pop. Where would you sell? Where would you
That
sell
worked
this?
better, though. You got rid of the one.
Yeah. There you go. I should have minimized.
We had to make funny on that, Joel.
It's the stupidest thing I've ever done.
Go take your pills.
I did. And I
Me and
swam
Spencer might not
2,000
be able to do the
meters.
rest of the show
And
after that one.
now I can't
That's going to
find
be on the
my...
highlight reel.
Wait, now I can't find my other chart. Where'd it go?
Just turned
Son
into
of a...
Oh, this
Wait a
just turned
second.
into a
Wait, I gotta find...
SHI blank show.
Wait,
Bring the guest on. Get the guest.
Wait,
Get the guest.
Wait a second.
wait.
Am I going to have to reboot? I minimized it.
Save the show.
No. Okay, there we go. No, I'm just kidding.
What's one of the
All right.
funniest things?
On a pop.
I don't know what he's talking about. I thought he had like a virtual hand.
Oh, no, I
inside
got
his
rid of that one,
computer.
too.
Okay.
Oh,
all right.
no.
I'm taking the chart.
Okay.
Joel, fix
All
the
right.
charts. Joel, take a
I
moment.
don't know where they went.
Take a breath. We got Anne-Marie.
I don't know where they went.
Anne-Marie's going to come and save us.
Wait,
She's
She's in the
on a pop.
background. She
On a
says, I
pop.
do that sometimes, Joel.
On a pop.
She's trying to
Where-
help you. She's
On
so
a-
nice. Anne-Marie
Shut
will
up,
say
Dennis.
she's...
Shut up. Shut up, Dennis. Where would you sell? Where would you sell triple BY on a pop?
Okay.
I can't even think
Right.
now, Joel.
Wait, stop. Where would I sell? Okay, no, in all
32.
Joel wants
Okay.
to answer.
Okay.
Yeah, 32 is the pre-market
You
high.
just got a $5 tip.
No,
for that.
not on the pre-market high. I tried to put my hand over the pre-market high. This is a daily chart. This
32.
is
I'd
right.
sell it at 32.
Oh, geez.
Okay. All right. And now look at this. We're going to do this. Anne-Marie, we're going to come to you in a second. 15-minute, right? Then
Yeah.
you go to 24-hour market. What do you got?
Laughing.
What do you got? What do you, if you're selling it,
32.
My screen.
there you go.
There it is.
There it is. That
It's an
took
easy
about,
game if you're using those daily highs and daily lows.
it probably took 7
Sometimes
minutes
easy.
longer than it should have.
Yeah. Anyways, that was excellent.
Jeez.
Anne-Marie in the
Anne-Marie,
background here.
save us.
Spencer, you didn't have to
So-
say that. You could have slacked me. You didn't have to tell
You,
me.
you
on
know
the
what?
bus.
And Anne-Marie is so nice. I guarantee she won't make fun of you for it. I just made fun of you for like last 3 minutes, telling you to take your pills.
So should I
Anne-Marie is
restart
so
my
nice. She
trade
would not do
station
that
or
to
should I
you.
try and redo these charts?
Redo the charts in the background.
No,
We're
I'm
bringing
gonna
on
re-
Anne-Marie,
All
I'm
right,
going to
Joel,
hit
the
no,
voice of reason.
exit,
Joel,
save
yeah,
all, no to all. This is a disaster.
No, why don't
Okay,
you
go ahead.
just restart your morning. Anne-Marie, how are you doing?
Start
today?
your morning.
I'm awesome.
Great.
Oh,
Fantastic.
that was some good stuff right there. That was some good stuff. So
And it's free. It's free. too.
yeah. Listen, we
That's
in
free.
the best of Benzinga, that one's going in there. It's got to have a year-end clip. You know, you guys do that sort of stuff. The best of that's definitely in there. So it's great to be here to see your faces and how the days are going. They're really very. Who watches the trend here? Do you guys watch the trend?
My buddy Rob does it. It's Stock Odds, and he watches it. He likes to really watch it early in the session. Is this something that you like to watch all day, or?
I do watch it all day, and I watch it to see it trending. And so, quick recap. I know I heard Joel say that people don't really like learning stuff, study stuff here in the room, but I'll be really quick. The trend measures how many people are buying when they're buying, and how many people are selling when they're selling, and they take the ratio of it. So if you see a trend that's bigger than 1, it means that more people are selling the rips. And if you see a trend lower than 1, it means more people are buying the dips. So what we've seen over the last several days is this general rise in the trend. And so if you watch some of the other folks on Twitter, they'll say, hey, listen, it's rare that we see a very upside new high and only, 20% of the stocks are moving at their new highs, or maybe it's even 10%, or maybe it's even, 23 stocks. So this elevated trend has me on a little bit of an alert.
Okay.
Now, everyone realizes that the Fed's got our back. So all the deep dips are going to get bought across these wonderful hedging instruments in the futures. As far as real stocks go, it's become a real stock pickers market one more time because the markets are bifurcated, right? We'll look at the NAS and we'll see we've got some really good movers and then not so good. If we have a heat map that we can pop up, you'll see that every day there's not broad participation. And so this is a concern to me, the lack of the broad participation. So my favorite thing to do when I see the lack of the broad participation is I start looking at how the traders begin to hedge using the S&P futures, which is, what I spend a lot of time focusing on. And what I want to share is we've got a little bit of a caution sign right now. It's the end of the month, end of the quarter. We've got load rebalancing coming to finish. Today could be very, very choppy. And then as a lot of these options roll off and get moved into the forward month, we could see a little bit of jockeying in terms of price. So your weakest stocks that you're thinking, if this breaks out, this is going to look really good. You better see how far you are away from that 50 moving daily average, that 50 moving weekly average, things that you're investing in. Watch for that to start losing your support zones, say it around under the 10 or something like that on the daily or the weekly. These are all caution zones for you to go, I think I need to take some profit, because a lot of us really have a ton of faith in the fact that the dips will get bought. But if you check the streams, you'll notice people are buying some dips and then going, why isn't this moving? Why can't I get a new high and all of that sort of stuff? So that's the big thing that I've been noticing across the board. If we look at the Dow, if we look at the NAS, if we look at the Russell, if we look at the S&P, we see that we are in a market that is very scattered. We see things near highs, but there's a whole lot of red floating around there on the heat map. And so that's cautionary zone to say, hey, listen, put on some calendar spreads, thinking maybe you get a little fade and then it bounces towards the end of the summer. My suspicion is that this variant is going to take hold just a little bit more. We're seeing Australia. We're seeing a lot of different smaller countries saying, hey, we're still going to put you guys on quarantine. Yeah. So a little bit of a dip and it would be good for the market, really, in terms of, hey, are we holding what we need to hold? So hate to be the harbinger of doom there, but it's just for a little bit, and we'll be able to buy these pullbacks.
Yeah, I mean, we look at here and you think, the S&Ps are basically making new all-time highs, the Qs, and
Exactly.
everything looks, dandy where, but when you look really under, there's a lot of stocks that are really getting
Exactly.
hit here.
Exactly.
So I think I agree, this has been a stock pickers market and it's been a sector pickers market, I guess.
Yes.
And I don't know, like right now, like we were saying earlier on the show, it seems like when everybody's in doubt, they go into tech. But then I look and the tech trade's very crowded. So what happens if all of a sudden they decide, well, maybe I want to sit in cash? I mean, there's a lot of money hiding in tech, including myself. So
Right.
where do you go right now? If you're anticipating, maybe a little more or a correction or some downside here, where do you go for safety here, Amber?
Okay, so for me, and again, this is probably maybe a little bit more complicated than we want to get, but you stay with the strength until the strength starts fading. So let's take a look at Microsoft. Run it off the rails, right?
Yep.
Don't go to the ones that are popping up red or starting to flatten or getting that great. Joel had such a great example of what he was going to show about these topping formations that say time to sell. And then, of course, we moved into a comic episode. But truthfully, that's really one of those big things that we take a look at. So if we take a look at Microsoft and we just put it on, say, a daily chart, right?
Yep.
And we say, hey, let's look at the 10 simple moving average. Let's do something like that. If it starts losing that support edge, if you own the stock, you want to hedge it. So for me, I'm putting on a calendar spread. I'm saying, hey, listen, I want to sell the 220s or sell the 240s, and then I'm going to go 2 months out and I'm going to buy the 240s, the calls. It'll give me a credit and it'll give me protection on the fade. And when it bounces, I'll have an option that is, in the money. But I do think that we come into the 260, 240 edge potentially in some kind of deep shake that moves us. Maybe we'll get lucky and we'll only stop at 250, which is a nice round event. But that's really what you got to do. You got to look at those old support levels, keep them right on your screen, and stick with the winners. Buy the small pullbacks until they stop giving you what you're looking for. I mean, you got to turn it into the Forrest Gump trade right now. If you overthink it, you're going to spend too much money on protection. You're going to buy puts that expire worthless, which happens,
frustrating.
right? So you don't want to overthink it like that. You want to go, hey, maybe if I have the stock, I sell a call into it, and then I buy the call in the forward. So if somebody goes, hey, you know what, that call's in the money, you got to give me your stock, and you go, I don't want to do that, then you just use the next forward month, and it's cost you maybe $2, right? $3, $4.
Anne-Marie, when you're looking at something like a Microsoft, if you get the double top or the triple top, that's kind of rare. I mean, those formations do come up. They usually don't hand you the top like that, right?
Yeah.
But what I kind of like to do if I'm looking for something to top it out is I wait for I look at the closing price, because it's so hard to get the exact high tick unless it's selling the high and buying the bottom. But like all the institutions that own Microsoft, the best mark, at the end of the quarter, the best mark they've ever had is yesterday's close at 271.40.
Right.
I mean, so they're down money right now in Microsoft today, right? I mean, that's the way, from a modeling standpoint, who knows, what it's going to do on the day, and it could rip. But there probably are some institutions or some algorithms that say, wow, I'm going to start keying on 271.40 now. Forget about, that was right near the high too at 71.65. But I kind of think like keeping an eye on the closing prices and then maybe waiting for a little bit of consolidation, and then maybe the breaking out of the lower end of consolidation instead of trying to like pick the top. And I know options are good. and I think I mentioned this to someone yesterday about some of the weekly options. You know, if you got something that's really in the money on Monday and it's trading at 257, I'm just giving an example here. On Friday, it could be trading at 258, and your option is going to be worth less than it was on Monday when it was trading at 257.
Yeah. Which is why I don't love weekly options.
Yep.
Weekly options are great if you sell them. Remember, the statistic is more than 70% of all options in the market expire worthless. So whenever you buy them, you have to think about that. Statistically speaking, and I am very probabilistic in my trading, very statistical in my trading spaces. For me, I don't look at the closing price unless I end up, gapping up and I go, okay, well, the gap fillers are going to come in at the 271. But remember that trend. That trend is saying the new highs, people are shaving some off. Now, if you've got a portfolio that says, hey, listen, I'm only going to have 12% of my portfolio event sitting in Microsoft, you're going to have a selling event come around today because it's moved like the wind. And so you're going to have to fade, and you're going to have to take some profit to bring your portfolio balances into the proper percentages. And so that's something that a lot of folks don't really think about. That's why the end of the month, end of the quarter is just wretched. I'm going to try to trade as little as possible on a day like today, simply because there are going to be people that are looking at these rock solid winners that go, wow, I'm up at 15% and I'm only supposed to be 12. So I got to sell this down, move it into cash, figure out where I'm going to go into the next position, wait for a pullback, re-enter, blah, blah, blah.
All great thoughts, Anne Marie. All great thoughts. Anything else you want to leave us with? Anything aside from end of the quarter today? Anything on your radar going forward? Or I mean, are you sort of like us in that you're, we're coming into July here, summer doldrums, 2 weeks till the next earnings season, so just quietness, right?
Yeah, my thought is what's been beaten that needs to recover are the semis. And then, of course, I'm into the cyberspace a lot, the cybersecurity space, and they've taken a pretty good dip. We'll watch them come in to their weekly 50s or maybe their daily 50s and start some consolidation. The key here is are you steady enough with your trigger finger that you wait for the sales before you start buying? And I think that if you are building a portfolio, you need to wait for the sale. And if you are trading intraday, you need to keep your eyes on that 50 moving average on, your 5-minute, your 15-minute, whatever, and just watch the motion. Just try to trade, not counter trend, and do yourself a favor and don't try to pick a top right now because there's too much against us across the board. Even if we're right on the top, it's going to run our stops. And, unless we see that very beautiful trend that Joel was talking about, that double topping space that gives us.
We do have it. Warning. The high yesterday, 91. The high today, 90. Warning, Will Robinson.
Yeah. And, I am inclined to believe we see a fade today. I really am, because a lot of options are going to get covered into the motion. And we've got a lot of thin volume profile action down at 70, 72, 42, 72, 42, 70, 42, 61, all of those spaces. But again, these are going to be sale events. So you watch and you nibble a little bit and always keep your eye on the risk.
And Maria, I'd be curious to get your thoughts on Sentinel-1, which IPOs today. I don't know if you followed it at all, but
I haven't. Tell me about it.
Cybersecurity play, competitor to CrowdStrike. Maybe next time we'll chat about it. But
general question with those, Anne Marie. Do you jump? Are you one that holds off on trading the IPOs for a few days? I know Barry, who we're friends with, obviously, he always says I hold off for 6 months. How long do you hold off before you start diving into
You
the
know,
technicals on a new IPO?
I want to see the patterns hold for several days, because we know that in the first 7 days of an IPO, if it loses traction off the opening range in the first 7 days, it's going to fade.
Okay.
So that first 7 day space is great for the intraday quick snap trade that comes down into support and then moves back into resistance. But after those first 7 days, things sort of wash out in terms of seeing if people believe things or not.
Anne-Marie Baiynd runs the tradingbook.com. The link is in the description, as is the link to her Twitter. Anne-Marie, always a pleasure. Thanks a lot. We'll talk.
Thank you. See you later.
All right.
Thanks, Anne-Marie.
All right, 8:53. Got a couple minutes before our next guest. So let's talk. We did have another earnings report, Constellation Brands, and we'll do some ticker time in a second here. STZ reported as well. That was the other big report on my radar. It was this morning. EPS. Adjusted EPS was $2.33, beat by a penny. Sales, they were both more or less in line, if a smidge over the estimate. They gave some comps guidance, and that was in line. And they reported a accelerated buyback program of $500 million.
Lots of good news. Overhead supply everywhere from 235 to 240. So I don't know where it's been to in the pre-market, but I would expect, if I was just using the technicals, that you'd have some resistance in this whole 235 to 240 area. So hard to be a buyer up here at 4, knowing you're coming into that whole overhead supply area. So I'm not chasing it.
Man, yeah, I should have went first, because you stole
Everything.
Exactly. I'm telling you, exactly as you were doing this, and I
learned it from you, man.
I won't put my hand over the screen because I want you guys to see it.
Yeah, thanks.
But this is exactly what I did. I looked at this high and I said, that high is at 236.16. So I'm going to keep an eye on that. And then I went up to like 4 highs in the same area. And I said, wow, that's 238.54. So you said 235 to 240. You nailed it. I looked between 236.5 and 238.5. So, pick your poison there. It's bid right now. It's bid at that area. So bid. You might get it. And that would be one of those things. If I had a big position in it and I wanted to exit today, I'd be out there, 100 at 35.5, 200 at 36, 500 at 36.5, 1,000 at 37, 10,000 at 37.5.
If you're holding 20,000
at 38, it depends on the size of your position.
I don't know how many people are holding 25,000 shares of STZ, but they're institutional traders.
We got some big players in here.
Oh, we do.
All right, let's do a couple of tickers from the chat. Let's look at Fisker here. We haven't talked Fisker for a hot minute.
I haven't looked at it for a hot minute.
Well, it's come off the lows. It's went from 9 to 19 here.
I still love the story on Fisker. I'd be a buyer of pullbacks. I sold my stock. I shouldn't have sold my stock. Oh, I don't know. I screwed this one up. So I'll just pass. I don't like the candle from yesterday. So that's the concerning thing, is that candle from yesterday closing near the day's lows too. Looks like it's got a little bit of work to do on the downside. This thing gets back into the 16, 17 area. I think you'll find buyers, willing buyers. But, again, there's a trend there too. So some people are going to want to hold that trend. So I want to rebuy my shares at some point in time. I'd love it back at 15, but I don't know if it's going to get there.
Is this the one that was added to the index of worthless companies, the Russell?
Was Fisker? I think it was.
Yeah, I think it was.
I think
it was. So I mean, it got the little bounce on Friday from it, and it improved on Monday. It kind of looks like it's stalling here.
Yeah,
so I have to agree with you. Leaning on. Yeah, it's already taken out the 2 lows from yesterday. So I agree with you on that one. Sellers will be ahead of 2021 and 2061 on a pop.
What about Squarespace? Recent IPO, SQSP is your ticker.
Did Square and Space?
That's the Squarespace merger, Joel.
Yes.
Yeah. No, we've all seen ads for Squarespace. I hope you've seen or heard ads. They advertise like everywhere. It's like the website hosting platform. You can make your own website.
Ugly candle yesterday. Obviously, putting all these tops, rejected massively here. So now if you get back up to 60, 61, 62, you got all these people who are caught from the whole 63, 64 area looking to get their money back. It's a tough candle yesterday. So I can't be a buyer here until we at least get some type of double bottom.
Well, if you're looking at going back a couple days, you do have it at 58, 57.80. That was your low on the 16th, 58 the late low yesterday. So trading up a little bit pre-market under 58 here. You got a ways to go. Next daily low comes in at 57.
And then we'll do one more. Let's do DOYU. Do you? I didn't write down who asked about this. Sorry.
ADR. Oh man, that's an awful trend. Oversold, but holy cow, trend absolutely not your friend. You had the blow off top back in February when Benzinga up to $20. Now everybody bag holders central here. $6 is huge though. I will say that's where you got back down to in April of 2020. So not surprising into the sixes, you do bounce out of there. So you do have some good support in the sixes. Do you want to say this is the bottom here though? I mean, a lot of people have been trying to call a bottom this stock for the last 3-4 months, and all of them are losing money. So tough trend.
They should change the name to Don't You Buy It. Yeah. Echo Dennis sentiments on this one. Or maybe put a buy stop in at 8.25, and if you ever get long there, then see what happens. But all right, Spencer, I'll let you wrap it up. I'm gonna missed a lot of symbols in here. Nike, Shop, gonna cover those on pre-market prep. I'll be over there in a minute. And Spencer, I'll see you at 3:30.
All right, that's at premarketprep.com, everyone. See you, Joel. All right, guys, we got a special guest on right now. It'll be his I assume his last time ever on this show because he's riding off into the sunset. Chuck Self, the CIO of iSectors, is retiring, and we had to get him on one last time. Yeah. Chuck, good morning. Welcome back.
Good morning. Good morning. Thank you very much for
Are we your last ever interview?
You are my last media interview. So I obviously saved the best to last. And I was looking back. I started in this business 40 years ago, this coming August. And the Dow was around 900 when it started. And here it is at 34,000. And I started in the bond market. And so the 30-year treasury yield was about 15%. So
you've been good for the markets, and now you're going to leave us. Does this mean we should sell stocks?
No, you shouldn't sell, you shouldn't sell stocks, but you can't just, you just can't throw a dart out there. That's why your show is going to be necessary for all traders and investors out there, because it's going to get harder for the next 40 years. So 40 years from now, have me back on, and then we can
put that in the calendar.
Our prediction came true.
And we'll see how the next 40 years goes.
So,
Chuck, I do have to go myself. I just stayed on for an extra 3 minutes because I wanted to wish you well on your retirement. Obviously, you've come on the show for years there, so we've appreciated all the content that you've provided us as well. But I just wanted to wish you well there, Chuck, and we're gonna let Spencer take over the interview. So good luck.
Thank you, Dennis. Bye bye.
Chuck, let's just talk right now, markets right now. What's on your radar here? Is there a sector that you're watching? Is there a trend that you're watching?
Yeah. All sorts of people are talking about, should we be in growth stocks, should be in value stocks, and our view is that it's not growth or value. It's all about the companies themselves, and of course, you guys are always about the companies themselves. We think that we had this big run so far. Valuations are at the best fairly valued and at the least extended. And so at this point, we got to have companies that are really going to go through with the earnings and be able to return a value to the shareholders, whether it's increasing dividends, buying back stock, whatever it's going to be. So we're really focused on high quality, good balance sheet companies that will be increasing their dividends going forward, or buying stock going forward. So there's going to be good stocks in every sector and bad stocks in every sector. And that's the overall market trend. Now, we do believe, when we come to valuation, that value stocks are still cheaper than growth stocks. And even though growth stocks have been massive in June, it's going to, I think this is the beginning of a value market that's going to last many years. But there's going to be good stocks in all sectors. It's just finding.
So what metrics do you use to determine what's good and what's bad?
Well, again, probably our number one vector is the possibility and the history of growing dividends. There are companies out there that have grown their dividends every single year for over 50 years. And as long as there's visibility in those companies, when the markets, we're going to eventually get a 5 to 10% correction. And whenever that happens, those are the companies that are going to hold up and then be willing to ready to spring forward after that correction. So that's the number one factor. We also like high quality. We like to see companies that have relatively low debt versus their equity, and so all those things together are companies that we're focused on. When we have certain sectors that we think are sector wide have these qualities. If you'd like for me to talk,
please name a few. Okay,
well, healthcare has not really been on the radar. But before I talk about healthcare, I know we all have been conditioned to love technology. Mm-hmm. I'm overweighted technology, and I don't want to say that technology is dead. And I don't know if it's the big technology stocks that are going to do well, but certainly technology will continue to do well. But I want to emphasize things other than technology. And healthcare, I think, has not gotten the love that it should get. It was the healthcare companies that saved us, in essence, in the past year. In that without the development of the vaccines, we would be in a different place now than we are. We think that this is going to have spillover effects in both pharma and healthcare supply companies, in that they'll be able to shorten the timeline that it takes to get approval from the FDA in order to get new things out there. There's Biogen, obviously it came up with this Alzheimer's drug, and there's all sorts of controversy about it being $56,000 a year. But we need drugs like that, and it's going to only get better for the healthcare companies. They're not extended valuation wise. Yes, they haven't done great if you're a short-term trader, but we think that in the second half of the year, healthcare would do well.
So are you looking at like a specific industry within healthcare, or just like the entire sector? Or are there specific companies, specific ETFs? I mean,
we don't play the subsectors, so I don't have expertise there. We certainly don't play the individual companies. And the way we tend to do this is to use low cost index ETFs. The one we use is the Fidelity MSCI FHLC is the symbol, and as you can see, it hasn't really kept up with the market, but it's done decently in this year. For people that want a little more octane, there's RXL, which is the ProShares Ultra Healthcare, and that's up about 25% this year, and it's done pretty much what it was supposed to do, which is to move 2 times the amount of the index itself. Now, in the prospectus, it's supposed to do that on a daily basis, but it's been up a little more than 2 times the percentage change for FHLC. So we think that it's perfectly fine to play these sectors this way. If FHLC has an 8 basis point management fee, and because it's an index, it's in the top third of all performing funds. So we would be very happy if investors are using that.
Okay, so you're looking at healthcare. That seems to be your favorite sector going forward.
It's certainly a favorite news sector. Yes.
Favorite.
Mhm.
Okay. You aren't so much focused on growth versus value as you are on the quality factor, right? Which is a factor you can screen for, right?
Right.
The right quality, companies with histories of dividend raises, not a lot of debt, et cetera, et cetera. Chuck, I'm just curious if we can just zoom out for a moment here, if you can offer us some just like lessons you've learned in your career. You obviously have a longer term perspective on things. And as you walk away from the industry, hoping you can impart some wisdom to us on some things you've learned.
Well, there's a lot of things you learn, because everything I'm going to tell you, A, you already know, and B, you're likely to violate along the way, because it's always different. This time is always different, right? And that is the absolute worst thing to ever think, that it's different. It could be different for a while, but it's not going to be different ultimately. The market is based on human behavior. And I'm a graduate of the University of Chicago, and the University of Chicago had this whole thing about that people are going to act rationally, whatever. People do not act rationally when it comes to the markets. And so it's if you're a trader, it's great to ride the wave, but it doesn't work for the long run. When it comes to specific markets, I started in the fixed income markets. I was an institutional fixed income person for the first 20 years of my career. And one thing you can count on is that bonds and currencies and commodities do have a trend following aspect to them. And whatever discipline you use in those markets, you should add trend following to them, because it's done well. I ran a strategy in 2008 that actually made money because it was trend following in the fixed income markets. The equity markets are not trend following over the long term. They're mean reversion. They go back to the my MBA is in statistics, so you have to
explain that a little bit more.
Yeah. So ultimately,
we always have the trend is your friend. So explain that.
Yeah, and it can be for a short period of time.
Yeah.
And so if you're a trader, that's very true. But for the investors out there, you can't look at the past, because the stocks are the most efficient market out there, and they will reflect information relatively quickly. Now, again, for a short term, there could be investor demand and supply can make things happen, and that's why technicals work. But it's not going to work for investors. For investors, you have to really be in tune with the fundamentals, and the fundamentals are based on earnings and interest rates and prices. And so, those are the three things that make up the markets. But patience is a hard thing, and it's a hard thing for all of us that work in this day after day and week after week. I've told almost every boss I had that you'd make more money for me if you just let me come in once a year, make whatever changes, and then let me go away for the other 364 days. No one has ever taken me up on that, but I think that's really true. If you're not a trader, you should ride with things, and you shouldn't be having a whole lot of turnover. Trust yourself, trust your instincts, trust your analysis, and let that be what drives you.
All right, Chuck Self is the CIO and COO of iSectors, at least until the end of today.
That's right.
You will no longer be those things. Chuck, as Dennis said, we've appreciated you coming on over the years. It's been a pleasure to talk to you. Good luck in your retirement, and if you ever get the itch to talk about markets, my email.
I do. I'm probably not going to be a regular watcher of your show.
That's fine.
I'm going to hopefully be sitting on a beach somewhere.
That's fine. That's fine. I would expect nothing less. Thanks a lot.
Thank you, Spencer.
All right.
Yeah.
All right, guys. 9:12 here. We got about 10 or so minutes left. I'm going to segue over to Mitch, Money Mitch at the open at around 9:30. Got a couple other things to get to. We did not cover General Mills this morning. Let's share my screen. Let's get General Mills up there. GIS had earnings. Let's talk about it for a second. Earnings per share, 91 cents versus an 84-cent estimate. Let's zoom out on this chart. That's a little better. Sales, 4.5 versus $4.36 billion. They see their organic net sales down 1 to 3% this year. That's year over year. That's not surprising, right? There is no way. Let me make this bigger. There is no way that General Mills is going to be able to live up to last year's numbers, right? Last year was like the year for stockpiling food, right? So there's no way. I know that the numbers were strong when comparing to 2019. The numbers from this past quarter were strong when compared to 2 years ago, which is probably a better estimate. But anyway, EPS beat, sales beat, numbers down year over year. No real surprise because last year was, pandemic, perfect storm for a company like this. Stock is down in the pre-market. You can see here this morning, down about 1%. Right now, you are at the same levels you were at back on the 24th, right around the, you're off those lows now this morning. The pre-market low, 50, what do we got there? 59.03 is your pre-market low. So as Joel says, that's the bogey, the pre-market high and the pre-market low of the session. A couple people have been talking about DD, which IPOs today. I believe it was upsized. Actually, they sold more shares than they were expecting to. Expected to price their IPO at the top of the range of $13 to $14, and I believe they did upsize this IPO. So if I remember how Uber opened, and typically this will probably open, at the earliest, I would say 11:30 or noon, or maybe even later than that. So watching DD today, yep, Matt Hammond's confirming 317 million shares. Oh my gosh, 317 million shares on this DD IPO. That's huge. That is huge. That means they're gonna. It might take this thing all damn day to open. Actually, Matt's saying 1:30. It might not even open if it's got to figure out how to get through that entire block. Woo! Okay. Matt Hammond also in the chat. Thank you very much, Matt. Donut Krispy Kreme moved to tomorrow. So we'll have to keep an eye on that one tomorrow. What else was on my radar here this morning? We covered the rating of the day, which was Space SPCE getting a double downgrade of Bank of America from buy straight to sell, or underperform their version of sell. What else caught our eye on the ratings front? Micron. This is interesting, guys. Micron catching an upgrade this morning from BMO to outperform, raising their price target to 110 from 90. Why does this matter? Because Micron reports earnings tonight after the close. Micron, we're getting a call here. I love these calls. I love when analysts come out before the numbers come out and they take a stand, right, with some conviction. So we have an upgrade this morning. Micron is up 2% into the report. Let's watch this. Let's see. Maybe this kickstarts Micron for today, right? I'm just playing a hypothetical here. Kickstarts Micron. Micron has, let's say it has a great day today, closes up, 3, 4, 5%, whatever. And that rally could influence how the stock reacts to your earnings. So let's say it rallies today off this upgrade and it's a good report. We've seen before when stocks run into earnings, regardless of what the numbers are, good or bad or otherwise, when they run into earnings, they can sell off after the fact. I'll be very interested to see what Micron does today if it runs into this report. Let's zoom out a little bit. You can see it hasn't really done a lot the past couple months. So really, the entirety of this year, actually. So let's see. It's had a few, a couple good weeks here, or one good week. Let's see if it can run into the report tonight. Looks like we're at some daily resistance here at the $85 area, which is right pretty much where we're at now. So very interesting to watch Micron here. Back to the earnings calendar just to see what else we caught today. Micron upgraded. Seagate STX upgraded at Barclays to neutral. Okay. Taiwan Semi upgraded Susquehanna to neutral. Okay. Does nothing for me. Go back to downgrades. Downgrades always more interesting anyway. Pulte Group, Home Builders, downgraded at Goldman Sachs to neutral. AppLovin, APP. Oh, let's look at this APP. Morgan Stanley is going to underweight on APP. I feel like this one gets a lot of love in the chat. I can see why, right? This thing's been ripping. I don't know what kind of call this is, if it's a valuation call or what. Let's take a look at the analyst history on APP. There's probably almost none. It's a recent, very recent stock. So let's just go back here and go here. Yeah, very little coverage on sort by date. Very little coverage on this one. So Morgan Stanley, one of the underwriters. Now that's interesting, right? We can tell because the stock IPO'd on May 10th, okay, or not May 10th. It IPO'd in what was it, late April, early May. The underwriters all come out. They have a little quiet period. They all come out and they're all bullish. Surprise, surprise. Why would they be bearish a stock that they underwrote? But here we are a month and a half later. One of those underwriters is coming saying, nope, never mind. We're going from overweight, skip neutral, straight to underweight. Price target $68. So very interesting downgrade. The first downgrade in AppLovin's history. So it is down 6% this morning. That is why one of the underwriters turning bearish. You don't want to see it. Let's see how it reacts into the open today. But okay, yeah, and POW had earnings, right? POWW, ammo, right? Let's take a look at ammo here. Bring up the chart. Q4 adjusted EPS 4 cents versus an estimate of a 1 cent loss. Sales beat by a smidge, 24 million versus an estimate of just below that. Okay. We do have some volume here overnight. Stock is trading higher. Yep. The entire move, though, already happened. We've been really quiet for the entirety of the pre-market session. Let's go to a bigger chart and see what we can see. So we were in really quiet this morning. The move happened after hours last night. After hours high right there. What's that? 995, 996, right? A little bit of a double top. You can see right there. Those two candles. What is this? This isn't their first report, is it? I just want to confirm. Just want to go back and look at some history. Let's just go. No, let's go here. PAL. That's where I should have gone. Calendar earnings. No. Second report as a public company. Okay, so not much in history to go off of here. Go to a daily. Wow, we had a great day yesterday. All right. Pretty much at all-time highs, right? Is that what that is? Yeah. All-time high. Whoa, look at that. Interesting, right? So what was the all-time high from February 16th? 995, right? What's the after-hours high from last night? 996, 995, right there. Okay, line in the sand. 995 is your resistance until proven otherwise. What else? Let me catching up on chat here to see what I missed. Remember Luck and Coffee? Sure, remember Luck and Coffee. What about it? Are they still around? Are they like Hertz? Still lurking on the pink market? I haven't looked at Luck and Coffee for a hot minute here. What else? Do you see support for Wish in the 1260s? I don't know. Daily. Oh my god. Look at the volume in Wish. This thing was like barely traded. And for whatever reason, the market falls. Wall Street Bets decides to fall in love with it. What was the level? 1260s. Not on the daily. Let's see. Let's look at a weekly. Nah, not really on the weekly. Intraday. What's that right there? I don't know. Is that 1280? Is that what you're referring to? The low from the 21st? Let's go back to a daily here. No, I'm not really seeing that. Alex. BBBY we covered already. Rewind about a half hour. Space 8 we talked about that. BFI, yeah, somebody mentioned that. Was that you that Greg that mentioned BFI earlier? BurgerFi. I saw this one. Why was this on my radar a couple days ago? Was there news or something? There may have been news. I remember this one from like Monday. Oh, no, it was
I think
Oh,
we
because
talked, Shake Shack, and then
Oh,
that's when
maybe.
we talked about it.
maybe okay. Oh, wow. So I mean, a lot of consumer stocks are really strong, right? And this one clearly is not playing ball. Well, let's just compare this one to Shack. Oh, that's interesting. I would have thought Shack would be closer to all-time highs than that. What are the other big? Yeah, I mean, we could look at like, what's Outback Steakhouse, guys? Is that Eat? Is that Brinker? No, that's not Brinker. That's I'm blanking on this. Anyway, all right, back to BFI. Okay. So, what do we see here? Oh, Bloomin' is Outback. BLMN. All right, so that looks a lot stronger, obviously. All right, back to BurgerFi. What do we see? What do we see? We see series of lows. Series of lows in the high 9 area, right? 977, 979, 977, 983. So there's your level. If you want to go long, you stop yourself out right at that support. If it breaks through it, you cut your loss and you move on. That's why I would do it. Yeah, and Vegas that's my point, right? Chipotle is really strong right now. Really strong right now. Holy cow. Look at that. We talked about that yesterday. All right. It is 9:25. I'm going to wrap it up here. We're going to segue over to Money Mitch. He's going to live trade the open, walk through his setups, and I'll jump in with him and hang out until 11 o'clock. We've got a bunch of great guests today, guys, on SPAX Attack, on Power Hour, on Moon or Bust. A great slate of shows and guests today. So do me a solid and give the like button a good old-fashioned smash. I would greatly appreciate that. How many likes are we at today? We're at 400. Is that right? I think 400. 406 now. We're getting there. All right. Thank you to both our guests today, both Chuck Self and Anne-Marie Band. Both the links to their sites, their Twitter, are in the description of this video. And thank you. Without you, I'd be talking to myself in the past few minutes, and that would be a lot less fun. If you missed it, I highly recommend rewind the stream about 55 minutes approximately. I will be saving that clip for posterity. We'll play it at the end of the year on the end of the year blooper reel. But that was an all-time moment right there from Joel that made my day, actually made my week, quite frankly. So everyone, please remember, this has Benzinga Pro. Okay, pro.benzinga.com to get a free 2-week trial. Enter the promo code YouTube20. It's up on the screen there. YOUTUBE 20 You get a 20% discount. If you missed it, I put the link in the chat at the very top of the show. We did a 3.5-hour-long webinar last night on YouTube. I'll put the link back in here because it was just that good. Nick Shaheen was there. Neil Hamilton was there. It was tremendous. Here's the link. Going back in chat. Check that out if you want to learn all about Benzinga Pro and how to use it. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. That's a wrap for me. Money Mitch is on now. The stream will redirect to that. You don't got to do anything, and I'll see you guys in a little bit.